Okay, Thursday, October 27, 2016. And I had a request for miners, so I did a quick scan on groups XAU. This is on the Philadelphia Exchange. I basically just kind of sorted them by kind of like from better to worse kind of thing. What I first have here is monthly. I want to get a big picture of where it's been, where it's going. The move basically through the aughts is the secular bull market in commodities. Okay. We had the rollover with the unwind. We had reaction. This is basically breakdown into the bear market. I view this bounce basically the same as the other bounce. This is actually corrective in nature to this whole thing. Okay. I posted a chart. I'll look for it. It was where I thought we were. I think it was like 1985, the same period. This is a bounce before we continue lower. Basically, these are, like I said, are monthly bars. You can set your alarms down below. At best, I'm going to say that it's going to be stuck. Metals are going to be stuck in a range for here. Newsworthy wise, okay, interest rates are going higher. You can spin that's because we have inflation, and you can have a move in metals that way. But like I said, I think it's going to be difficult because of the dollar. As interest rates go higher, so does the dollar. So it kind of defeats the purpose here. I would be more inclined to basically watch the metal more than the miners. Now, when we saw a NUG and JNUG move up off the lows, okay, for this year, it was a pretty good move. I think it was like 900% over 6 months or something like that. So now we have the metal picking up again. So what does that mean? That means like the dust and the JDST, okay, those type of bearish, I'd be interested in watching. Why? Because when gold fails up here, okay, those will take off. Do I think they're going to go up 900%? I don't think so, but it's one of those, it all depends upon where they're at. When the miners begin to roll over. But basically, you can see how there was a hard slide and chop up, kind of a longer slide time-wise than that. And then the quick movement here is usually short covering, the short, sharp, and quick. As you know, I wrote November, December about getting warm to commodities, gold in particular, things of that nature. And we basically had the move. So what I'd prefer not looking to see how far up we're going to go, but basically how far down we're going to go. That's how I look at it. See, mine was the turn here with the target of 1,400 on gold. Could we still hit it? Sure. Just like what you saw with natural gas, the same thing can happen to metals. I talked about this morning's video about palladium. It's a thinner contract. You could have people come in there and try and corner that thing. So things can kind of get out of hand with the commodities. It's just like you saw with the natural gas. So in my case here, just we're going to quick eyeball the monthlies. It's basically stuck in a range here between the monthly pivot and the higher end. And as you can see, the cloud contained it. Same thing here, the cloud will contain it. And this is going into 2018, okay. If we stay on economic course, 2017 should be a very good year for equities in that. And then 2018, because of when the Federal Reserve started raising rates, things should be pretty frothy, but say like new home building, things of that nature, auto sales, jobs, plus also we're going to have the boomers come out of the job market, and as they finally retire, and we'll have spot shortages in labor. Okay, when we see extremes, okay, we've seen extremes, political sides of things, left, right, left, basically hard. Now we have a hard right versus basically center left kind of leaning thing. Same thing in commodities. When you go to one extreme one way, then you have the extreme the other way. So here we are with labor. If labor for the herd has been depressed, I mean, I talk about the college here kicks out ambulance drivers at $8.69 an hour. Okay, the guy at In-N-Out Burger gets $11.50. Okay, so would you rather go to college and become an ambulance driver or make what 20, 30, 40% more and go to In-N-Out Burger? Okay, so if you chase after the dollars per hour or hours for dollars kind of thing. So it may take a little bit to get the people off the couch to go, those that are qualified for the jobs, to get back in there when the boomers come out. We're playing it kind of soft right now. Not a lot of investment going in because there's just not a lot of demand. I mean, you have the largest segment, the baby boomers. They're not buying 2 cars and 2 houses, and that cycle at all peaks. So. Okay. So CD, the red line I like to watch is unbalanced volume. You can see that it was frothy up in here. We're doing it again, not as much, but we're not getting as much of a boom here. So you can have fresh money come into it and push it, but basically this area is, like I said, is where I think it's going to hold for now. For right now, if this low holds or like near the pivot area, it could swing higher into these levels, okay, with the talk of inflation and that. But like I said, I would rather by then, if it does get up into this area, I want to be on the short side because, okay, now we know that there's inflation and there's talk about inflation. What do you do to wring out inflation? You raise interest rates. And what does that do? That wrecks the economy, which will eventually wreck the metal too. So it's one of these things that it would be like, I'd rather say I could see gold at 1,000 before I could see it at 2,000, that kind of thing. So I'm, in my case, since here was the play for me, the long side with target of gold of 1,400. And now that we're up in here, to me, if I decide to pay the long side here, my risk has to be down here and then reverse and go short. We may only get about halfway and roll over because I'm gonna assume the cloud and this, and at most the middle range here is going to be a stopping point here. But you also have shorts, so things can get interesting too. So it's one of these things that if you want to go long, today was a day I mentioned going long gold and stuff. Pull back in the dollar, go long, put your stop down here. Okay, what's this about? 10 and change, and we're at 12 approximately. Okay, it says a little 10.99 here. Okay, now the high was 12. Okay, so I basically have $1 each way. Now 12 on the upside. In theory, clears 12, you buy, and then put your stop below it at 10, and ride it that way. Okay. But for me, I'm looking for a place to short, okay, metals. Go into, because a lot of these miners that they will go belly up. CDE's been in there a while. I remember that as, I think it's that silver miner. Anytime they talk about silver, that's what's at. But these are 2004, 2005. So we're talking. Here's the high of the secular pattern, the bounce back, the hopes. This is the hopes, and then it rolled apart. We've got a strong bounce, and now, because what'll happen is, if gold only goes up 10% this year and stocks go up 20%, well, they're going to run. It's just human nature. They run into wherever it's happening, and that's where you get caught up with a hot hand. That's what it's called. When somebody has a hot hand and you go after them, and then it's kind of like how many no-hitters can you pitch in a row? That kind of thing. That's a hot hand. Okay, so that's CDE, Newmont Mining. Quick little deal here in 1987. I think Newmont Mining was supposed to be bought out for $105 a share. That was 1987, and I believe that was the last buyout. before we crashed. So, and then we went through the whole cycle again and nobody wanted it. So here you can see where Newmont Mining hit the upper end of the cloud here. So I'd be more interested in following this one here. Instead of, you can chase the little guys and they'll be all over the place, but something on a bigger scale where there's going to be some institutional buyers in here. I'd follow this one here and look for a short side and having it go back into the teens. And here you saw $10. If it goes full circle here from the cycle, $10. So we're at 40. So that's, you know, 70, 80% loss here. So that's, I'm looking at it that way. Okay. I would assume if it takes out the lower end here, the pivot, it's going to take out 15 and probably, you know, it'll be depressed. That would be nice if it got down to here, you know, hopefully then it's not going belly up. But I don't do too much fundamental analysis on this stuff. So, it's mostly technical. Just, you know, here was the bottom again on the turn. Then we moved up about halfway. We're not as interested. You could also say this is the shoulder ahead and another shoulder. So like Newmont Mining, I'd follow it and look for an area to short. Royal Gold, this one's kind of interesting here. That's another one. Here's a 2 times top. This one held up a lot better. They may be hedgers. That's the other thing too, is they could be hedging the gold, which would be interesting because if gold goes up, then this will actually lose money. They'll lose money in the futures, but make it up on the cash in theory. On Royal Gold, you have a double top here. This is, though, a pretty good pattern here, and this is the old springboard pattern. I'd watch this one closely here. Just like in 1987, Newmont Mining might be a takeover candidate because these guys are going to have to merge like oil companies and everything to try and cut costs to survive, basically, is a business plan. You know, we merge, fire people. You both companies need fewer people, so... but this one can actually swing higher here because of this springboard type pattern. Okay. Gold. Okay. Panamera silver pause. Same thing again. Came up, came down. Your reversal stop would be here. You can see that it's this also is a longer springboard. You know, you get it here and you spring up, but that's going to be the end of it because all of a sudden you have a series of lower highs. So you end up in theory lower lows. So in my case, I'd look to say if I could short it at 30, you know, and you have a head and shoulders 30, my target would be down here in the 2s. Okay, that's how I'd look at it. You know, you got half of half the money's in there. We're already about more than halfway up there. So, you're going to need the froth again to get it up to the previous levels. So there's not much interest. Sector rotation. Freeport. This bought Phelps Dodge. I was shocked when that happened, but that was on the way up. Okay, Phelps Dodge, I believe, used to be in buckets. Bonkers. Holy buckets. Okay, Freeport. So they bought Phelps Dodge PD, and I believe it used to be in the Dow. Okay, this, even though this is the old springboard type thing, this is going to have some issues here, like I said about the copper. As you can see, it had a deeper. What I would be interested in, if this thing didn't go belly up, okay, would be, we're talking over into the 2020s here. If things do what I think they're going to do here, and I'd be interested in start an accumulation pattern just because of the Phelps Dodge and everything. This may turn out to be the next Newmont, or like we just saw with the Royal Gold. But I'd be interested in accumulating here for the next cycle, which should start, I think, in like 2027, and as late as, I think, was it 20, 30, 32, 33, something to that degree. But this, even this is like an A, B, C type correction. Okay. We are mentioned in this morning's video with copper, we're getting up to an area, you know, where copper will begin to start pausing. They may be able to do some hedging and help out the situation, but, you know, we're talking, what's this, 2008, 7. So we're talking, it's almost a decade now, you know, so remember Microsoft, you know, it may not bottom for 6 years, you know, that kind of thing, you know. Okay. Next chart. Goldfields GFI, I believe this is South African. Basically a lot of sideways, lower highs. Expect a lower high again here. And this one might not make it just by looking at the pattern. I mean, look at it here. It's not, the rest were up and this one's coming down. So this one might not make it. The old BK, bankruptcy. Anglo Gold Asante, kind of basically the same thing again. I believe this is South African. Same type deal. I mean, you know, double top, heck of a V reversal, and then it's not looking so hot here. A lot of unbalanced volume here, so they're going to take it out of it here. Any weakness in gold, the weaker ones will feel it first, and they're already beginning to show signs of it. Kinross, same thing. This is pretty clean here, right up to the cloud and stopped. You know, so at best maybe one more swing higher, but we're talking time on here. All right, take a quick look at the equities. The bell just opened up, 631. We're still in the upper ranges. Dow is above, or excuse me, S&P above 2140. Dow 18,175. NASDAQ 4880, and the Russell is 120405. And the upper range again is with that 1212, 1215 area. If the Russell could not hold it, we'll give it a little more time here. If the Russell can't hold it, then we may have another short-lived day here for the bulls, which would then, you know, if we go back through 2140 again, then we're back to 2134, and we're going to begin to start making a series of lower highs again. Okay. All right. Kinross, yeah, Yamada. Not much here. Pass on this one. Weak. Not in very good shape here. And this was the index I got it off of. This was kind of nice, under 40. Thank you, Kevin. I said 120, got to 114. So I'll have to. I go with my first gut. When I was down here, I said it's going to go to 120. We got to 114. I talked about legging off of it. Okay, so basically, quote unquote, I got out early. Okay, on the way up into this. We're down to here. I still have to stand by my 120 area, and that was about here. Okay. We will see 79 eventually, but 120 and 155 are for the indexes. But, you know, this was the secular bull market. Now we're working on a secular bear market. Before we took off, we're down to here. We went below it, so there's a good chance, you know, that we come back down into here, because a lot of these are going to merge, go out of business, whatever. So I mean, you could actually have, wouldn't that be interesting if we went into a depression, right? You could see it come below this, and all of a sudden you'll start hearing talk of, oh, it's at a 40 or 50-year low. Ding, 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 I'd be interested. Indexes are nice because the hubris comes out and the new stuff comes in, so it's a matter of time, as they say, until they get it right. Okay, next page. All right, Rand Gold. That's a pretty good short from where it's sitting right now. Wow, Rand Gold, I would be an immediate seller. That's how I'd look at it right now. Oh, we got the frothiness up here too. Rand Gold, I'd be more than interested in slapping some on the screen right now. Kind of like this. If we do get an update in gold, then I would look to go out and find some puts, then you don't have to deal with it. Let's see if I can find something real quick here. GOLD options out to January. Okay, so let's just take a look at the pricing. They're off, they're thin. Okay, so January 18, 95 put, they're pricing it at 20. So that means 85. So at most until January 2018, they're only looking to at 95. So share or 20 points, 75. Okay, so the option players. Okay, this is what I'm talking about here. Okay, 2018. Now they're kind of pricey. The gold here. Come on, you. Okay, watch how I think this one through here. Okay, so we have until here. Okay, if you buy the puts at 20, they're at $20, so it's $2,000. Which, of course, considering where the price is at, to weigh it, it's a little bit more to cough up front, but we're talking $20 if you're wrong on a short. You know what I'm saying? A buyout comes out, we offer 130, 150. Yikes. Okay. But all right, so if gold does get a bump up here, and we have 93. Okay, 93. I looked at what was the option? 95 put, which was here. They were only talking 75, which is about, what's R1? Here's 79. Okay. So that's 80 right here. So the option players are only pricing into about 75, which is a little bit below this. Well, now I'm talking, the opportunity of, it becomes, this doesn't hold. We're back to a coin flip. This doesn't hold, we come down. I got to assume we're going to go below the 50s here, because then you just say that this is a double top. And then it slides. So you end up with a 95 put for 20. You start covering. It starts, paying off at 75, but it could slide down to here. That's how I kind of look at this pattern. This is a sideways pattern. That's the best for both bulls and bears. Most of the time it's distribution. Okay, up here it's distribution, down below. Because we're talking years here. 9, 10, 11, 12, 13, 14, 15. There's multiple years here. This is the best it could do on the oversold situation, but it's pretty frothy. So first off, we're going to merge kind of deal because cut costs, blah, blah, blah. But yeah, there's a lot of bodies in there. You can see a lot of bodies in here. 118, and then it drops down to, it basically gets cut in half. Okay. And then some here. So the same thing, where we're at here, what are we at? 86 cut in half into the 40s. Yeah. So you have until on those, they're $20, but it's one of those things that you can watch. Okay, beans are coming off. All right. Rand Gold, SSR, Silver Resources, same thing. High. This is the peak of the secular cycle. First, wave 1, wave 2, wave 3. It overlaps for 4. I just kind of eyeball it for Elliott wave. I would expect this to come down lower too. A lot of froth here. People are chasing after the lower price ones. But like I said, outside of the merger activity to cut costs in business, there's too much supply on the market per demand. So you merge some companies and cut things back, and you can survive. Let's see here. American Mines AEM. This one too, a lot of froth here. So like on the buyout or AEM, excuse me, this would be one of those that I'd watch closely on a possible short situation. Like I said, you know, the up move to me was January. You know, if I just followed the technicals, it would be with the breakout. Then, you know, if you're using a daily or weekly, the low would be that. I just, it's, you know, yeah, you can go after the long side, like, you know, 1 day, 1 week, 1 month, 1 year, whatever. But, you know, a lot of this here, yes, this is a coil and it's tightening up and anything can happen, right? And I do talk about how the baby boomers passing them, you know, their assets will come to the kids. I expect the kids to spend right away and not hold on. That's usually the human nature. 80% of NBA basketball or NBA, I think it's NBA basketball players file for bankruptcy 2 years after leaving. 80%. One guy had 110 million and he's doing the coffee thing now at Starbucks. So 70% of lottery winners are broke in 5 years. So it's just the human nature. They do not know how to handle that much money. You know, just your basics. Get a car. Don't get a Lamborghini. You know, if I bought a Lamborghini, I'd have to drive it back and forth because it would always need an oil change. I'd have to drive from Havasu to LA, oil change, drive back. Oops, it needs an oil change, drive back. You know, so out there, it's getting pretty frothy up here at AEM. I'd be looking, like I said, for an area to short. Equities are coming off. Well, they definitely didn't hold the open. Okay, Harmony Gold, same thing. Just it's a hard sell-off. Coming back up, just it's going to be penny stocks. We're back to penny stocks in some of these here. Wheaton barely got anybody involved, so basically people paid up to get in. Ooh, this would be a good one to short here. SLW. Let me take a look here. Where's my gizmo? SLW. Come on, yeah. Buzz Zowie, Batman. Boy, they are not holding on to anything this morning. Okay, charts. Whoops, where did it go? All right, Silver Wheaton goes all the way out to January 18. Also, 40 put is parked at 17, so that's what, 27? So 40 put for January of 18. And like I said, I'm just looking at these as 40 put. So we're up into this. So you basically get the high range. 40 put. 17. It'd be 23. So they're not even pricing in the lower end here. Yeah, see, it's that kind of deal. Yeah, they are in the money, but it's kind of like if you shorted the stock, you'd be in the money too. It limits your risk if there's a buyout or whatever. It gives you until here. Here's 15. So that's right. This is 17. Oh, that'd be 23. Excuse me. Yeah, so it is. They're not even pricing this in. What's R1? 15 or 20? Here's 20. Okay. And you have a 40 put, and it's at 17. So it's 20. So it's $3 on 17. That's not much for right now. Unless, of course, it comes back through. Lower high. Give it one more go. Failure, but if it fails to, then it usually comes back down to here. So silver wheat, and I can see it under 10. Is basically how I'd approach my plan was I'd be looking for this thing to go under 10. Okay, Gold Corp. Same, just a rollover. Didn't hardly got much. Percentage-wise, it was a pretty good move, but off the chart, hardly got anything. No one was interested to. Gold Corp, South African, I think so. Same thing, lower low. Here you go. You come back through, it's going to slide. And you just draw your trend line this way, and just draw your trend line that way. This one's Barrick. Same thing. This is your average trading range. So it's up here, you know, it moved, and the EDX is the blue one, right? Yeah. So the EDX is cracking. Well, this is monthly, so it's a little more difficult to read. But your orange, like here, average trading range. Okay, so this was the short here, basically. And then you'd want to add on any shorts if you wanted to sell the rally and then short when it goes below here. That's how I'd treat Barrick Gold. And that's the end of that. I'm going to post this up. We had the sell-off this morning. Russell, we didn't take out the lows. The Russell was the closest one, the Dow next. And then the NASDAQ is basically the strongest of the bunch. And then ES. So we're back into that level again. Let's see if we catch people selling at the happy place, because they're around, it's at 36 now. So we'll see how it holds here at 34, which was the previous high. So y'all take care, and I'll post this momentarily. Thank you.